A lot is being made. A lot of the stock reaction is on the back of a perceived sales miss. You make a very interesting point in terms of what this miss actually is. It sounds like you think it's more of a Wall Street analyst miss as opposed to a company miss.
Right. We should have listened to their guidance. They hit it right in the middle. And it implies if we take that learning and apply it to the September quarter, they'll grow at 18%. That's compared to 27% in the most recent quarter. That means that they guided down by 8%. So just kind of a level set there when we talk about these difficult comps. They just guided down by 8%. And why I think that that's an important starting point to your entire conversation here is that we need to think about what the arc of growth is for next year. The Street's currently looking for 19% before this report tonight, 19% revenue growth. But if you start to take Tim's play into action, which is looking at the stack in the back half of 2020 or 2019, and compare that to the first couple quarters of 2022, that 2-year stack, effectively you're probably going to get estimates coming down to around 15%. So maybe as a starting principle here, I would say investors kind of get comfortable with Amazon growing at 15% next year. And I would like to just kind of continue the thought and on terms of the guidance and what this all means together. There's a bigger question at play here, and you've been touching on it around profitability. There's the comp question that has circled, Melissa, as you've said, every tech company this reporting season, but the margin is a really big deal. Right now, Amazon doesn't have tech-like margins. It's funny because we criticize Tesla for not having tech-like margins. Amazon's operating margins tend to be between 6% and 8%. Apple and Google more recently were 30%. If you look at what Facebook was at, 40%. And so I think that there is a bigger question for Jassy here is what are you going to do to show some margin improvements in the years to come?
Hey, Gene, do you think this is a deliberate reset on Jazzy's first quarter as the company's CEO?
I think it played into it, that 8% guide down. If we look at typical guide downs, they do guide down in a half of the occasions, so it is half the time that happens. But usually the guide downs are more at the 3 to 5% level. This is at 8%, so I suspect he probably influenced some of that. I can say if I ever had the honor of having his job, I absolutely would do it. I probably would have guided 15% below the Street to make myself look good for the next few quarters. But I think that played into it.
Hey, Gene. I'm sorry. Hey, Gene, it's Tim. How about AWS versus the core e-commerce business? And we talked a little bit about ad revenues, et cetera, but where should we be focused? Because at times it was really all about AWS growth. That did not look terribly disappointing. The comps are tough there, too. Where are you focused?
I'm focused on, I guess, curtain number 2 here, which would just be around efficiencies, like we talked about. Is that the core e-commerce business slowed to 13% unit growth. It had been growing in the 40 to 50% range in the previous quarters. So big slowdown there. As you said, AWS has been rock solid. It's still relatively small, 10, 12% of overall revenue. But one thing that impacts all of the revenue is around margin. And I think that an area that I hope they talk about is automation. Amazon has 1.2 million employees. The majority of those are in logistics. And ultimately, I think if you fast forward this 5 years from now, I would like to hear the company adopt a position about putting people first, but also finding ways to greater automate the business. It is a massive operation that is ripe for automation.
Gene, always great to have you with us. Thank you.
Thank you.
Gene Munster. Let's trade Amazon. Let's trade Amazon in the context of what we've gotten so far. Basically, we have the entire big tech complex having reported. Tim Seymour, how do we digest this? There have been basically nits to pick in every earnings report except for maybe Alphabet.
Well, look, Amazon came into this under-owned and under-loved. It's going to come out of this even more so. I look at the underperformance to the group, and that gets me excited as an investor. I've never ever been terribly comfortable with their valuation, but I'm extremely comfortable with the ability that they can pull levers, become more profitable, again, increased operating income, and I think their subscription services, and Gene talked about where they can become a much more efficient company. But from a trading perspective, look, this is a company that of that 5 is not in the top echelon, and that's something you want to own as an investor, isn't it?
Yeah, Guy?
It's interesting. The last 2 quarters for Amazon were extraordinary, I think, by any stretch. And both times the stock traded up initially, then a week and a half later was significantly lower. This quarter was nowhere near the last 2 quarters. And oh, by the way, the guide was disappointing. So you have to ask yourself, if the last 2 quarters it sold off in a meaningful way, what happens now? I think Tim makes a good point. I mean, maybe we're sort of finding some equilibrium, but you got to believe there's still some downside room given what we saw the last 2 quarters.
Shepard Smith here. Thanks for watching CNBC on YouTube.